Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of April 8th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was great news for mortgage rates. We saw mortgage interest rates move lower, actually popped lower all week long. Nice move lower. Let's look at the bond chart on the screen. You can see starting on Monday, the bond rallied to touch a level of resistance. Tuesday, sold off slightly, but then Wednesday we saw a nice rally. Thursday, another big rally, and then Friday, a huge rally. We've broken off that downward trend we've been on. As you can see from the arrow, we're now on an upward trend. So what's this big shift we've been waiting for? We've been talking about that mortgage bonds would make a recovery. We just didn't know when. So we did get a nice recovery last week. Started with the initial weekly jobless claims report on Thursday. Came out with 28,000 surge in 28,000 claims. Bumped the number up to 385,000, much higher than expected, so showing that more people are filing for unemployment. So it broke that trend of showing lower claims. And that hinted at a bad jobs report. So on Friday we got the March 2013 jobs report, and it stunk. And the market tanked on that. Bond market rallied, pulled home loan rates much lower. So if we dig into that report, the first thing we looked at is we were expecting 192,000 jobs to be created for March. We only came in at 88,000. Very disappointing. Now, the unemployment rate actually ticked down from 7.7 to 7.6%, but that's very misleading because the drop in unemployment was not because people were going back to work. We actually lost 500,000 people from the jobs roll. So what happened was, instead of putting people back to work, we actually had less people looking for work. So they're not actually counted in the unemployment number. So a better number to look at is the labor participation rate. So the labor force participation rate dropped to the lowest it's been since 1979 at 63.3%. And that showed that's where we saw the 500,000 people coming out of being counted in the unemployment number. So bad news for the labor market. We also saw ISM manufacturing report come in much lower than expected. So that was bad news. The ADP private jobs report came out bad on Wednesday, so that was what hinted at a bad jobs report as well. And then we also saw planned job cuts increase by 30% for this year as compared to last year. So we're looking at more people going to be losing their job. And then the other thing that's helping move money into bonds, helping this rally, is North Korea. Big problems going over there. On Thursday, North Korea gave its army permission to use nuclear weapons against the United States. And then on Friday, they said they cannot guarantee the safety of diplomats in their country. So a lot of saber rally going on. New leader over there, young kid, very unstable, causing a lot of tensions around the world. If war breaks out, it's going to be bad news for the stock market. It will help the bond market rally some even more, move home loan rates lower. And then we also keep seeing these problems in Europe, the debt problems in Europe keep rearing their head. Cyprus was the most recent one. There's some other countries coming. So they have not dealt with it. They just keep kicking the can down the road. So as those problems keep coming up, that's going to again force bond investors back into the bond market, moving home loan rates lower. So a long-term outlook for the year is rates to stay low. Short-term, we got this nice boost in the rates. We do recommend floating your rate to start on Monday to see if we can hold these gains. If it looks like we have a sell-off for short-term profit taking, we would recommend locking in your rate at these almost best levels for the year so far. In the housing news, the local housing news, we've got CoreLogic released a report that home prices, including distress sales in February 2013, were 10.2% higher than they were the previous year, and that's the highest number since March 2006. And February 2013 was also the 12th consecutive month of home prices increase. So we've been telling you here on this weekly report that home prices increased for the first time since 2006 and 2012. We're on track for another increase in 2013. So it does look like we have a good rebound in the housing market. If you've been out there shopping, you've noticed that home prices are picking up. There's multiple offers, and people are bidding over the home price. And that is basically being driven by a low inventory. Most of the country, including Delaware, has experienced a very low inventory problem, so we're getting multiple offers, and that is helping the builders increase. So you're seeing a lot of new construction pop up because there is no resales available. Leaves it wide open for new construction to come in. In the housing news, we also saw USDA was planning on redoing the eligible areas on March 27th based off the 2010 census data. That has been pushed now back to October 1st. So that means Middletown, Smyrna, and Elkton are still eligible for financing. In the FHA, April 1st, FHA increased its annual insurance premium by 0.1% for 30-year fixed, putting down the 3.5%. It took it from 1.25 to 1.35, but it's across the board, 0.1 increase on all FHA case numbers assigned as of April 1st and thereafter. Now, so there was some confusing. FHA is moving the MI to be the life of the loan, but that does not happen until June 3rd. And it does not change it on existing FHA loans or existing FHA case numbers. Only new loans with FHA case numbers assigned on June 3rd or after will have the MI for the life of the loan. So we still have some time for that. And then Fannie Mae update. Fannie Mae reported its largest net income in company history for 2012 at $17.2 billion for the year, and then a net income of $7.6 billion for the fourth quarter. So Fannie Mae is now very profitable. It's doing very well. Its credit defaults has gone way down because it's now the files getting delivered, the mortgages being done on conventionals are much better now, so the risk for them is much lower. Definitely turning them around, so it's great news for Fannie Mae. In the local news, the next free first-time homebuyer seminar is in Newark, Delaware at the Christiana Hilton Hotel, and that is Saturday, April 20th from 10 a.m. to noon. And you can register for that. You might give us a call in the office, 302-703-0727. Then the next one in Dover, and that is Tuesday, April 23rd. That's at the Dover Sheraton, and that is from 6:30 p.m. to 8:30 p.m. And you can, again, register for either one of those seminars, giving us a call in the office, 302-703-0727, or register online, www.delawarehomebuyerSeminar.com. All right, guys, that's it for this week. Look forward to seeing you next week.